Well, ladies and gentlemen, we are crashing yet again, and we got to break down what's going on in the markets right now, stocks, charts, what I'm looking to do, earnings reports. So sit back, relax, take a sip of your coffee, get your free money from Moomoo, up to 5 free shares of stock, each up to $2,500. All you got to do is use that link down below, deposit at least $100, and boom, you get your money. And if you deposit at least $2,000, you get a free share of Twitter as well. And make sure to get your 5 stocks from Webull. Again, all that's linked down below. And with that being said, let's get into the video, because right now it is 1:15 roughly on the East Coast, and the markets are taking a dump. It's not looking good, guys. Let's just put it that way. So currently, we have the S&P 500 down 2%. The Russell's down 2.3%. We have the NASDAQ pushing down 3%. And we have the Dow Jones down 1.8% as the VIX is back over 30. The VIX is up 11%. And we have gold and silver. I mean, they're not doing much of anything today. But overall, screw gold and silver. We're not looking at those right now. Let's focus on what's going on with stocks. So, look, the S&P 500 now is officially back in a bear market, right? It is officially now down 20% from that $480 all-time high that was hit. When was that? Back in, in the beginning of 2022, right? So we're officially back in a bear market. The descending triangle we talked about yesterday is playing out. You guys can see that here. Boom. We called this out. Boom. Did I not say this yesterday? It is playing out. And I said yesterday, look, we have a double bottom and we have the descending triangle. And I talked about this in my Patreon video this morning. I said, look, if this 285 or rather 385 level on SPY breaks, we're going to see a big leg down. Boom, that happened. Now we're at 381. And I said triple Q, if that broke 285, we're going to get that leg down. The descending triangle is going to play out. And that ended up happening. We broke 285, 286. Now we're trading at 281. We took the lows out. We're at a fresh low on this 4-hour chart. And probably on that yearly chart, or that's been a thing. Maybe the 3-year chart. Not the 3-year chart. But overall, look, triple Q's now down, 33, 32%. It's right by that 180 SMA on this 4-hour or this 3-year chart. This is an interesting spot for this. And let's see what SPY is looking like on this 3-year time frame. Yeah, it's getting right near that, 350 to 360 level, that 180 SMA. This is where we could get some sort of support. We got to wait and see, guys. We got to wait and see. But overall, right now, it is a freaking disaster out there. And, pretty much all the stocks out there are red, other than, or at least on my watch list, other than CrowdStrike, Amgen, and Tyson Foods. All the stocks that I'm watching are red, other than those 3 or 4 that I just mentioned. So it's not looking good, guys. What do you think? Drop me a comment down below in the comment section. Smash that like button if you haven't done so already, and make sure to subscribe as well if you haven't done that either. And let's talk about some stocks now, kind of where my head is at with stocks, what I'm looking to do. We'll talk about some earnings, so sit back, relax. The video is just getting started, guys. So right now I'm looking at big tech, right? Big tech, and you guys know yesterday I bought Apple, and I'm actually now down a little bit on that Apple position. But I said yesterday, if it goes down even more, I'm willing to add a little bit more, right? Because I started the position at 136.50 or 60, something like that. I forget my average. Either way, it's right around 136-ish. Right now we're at 133, and I said if this goes down lower 130s, which now we are getting there, I'm going to add a little bit more. I didn't add more yet, but I'm thinking about doing it maybe later today, right, before the weekend. Or I might just wait till Monday. Fridays usually I like playing it safe, so I might just wait till Monday, considering I already had a pretty good week in the markets this week, trading Adobe and VOO. So I might wait, I might not, we'll see. But overall, this is just ridiculously oversold to me. I want to build a little swing position here in the low 130s on Apple. That's what I'm doing. That's the plan, right? That's what I'm doing right now. Google, this is one that I've been nibbling all the way down here. Google's now free falling. It's down 3.5%. We're at a fresh low. We just hit 2137. I'm looking to buy more Google. I said this, I said if it gets down to 2000, 2050, 2100, that's where I'm looking to buy heavier. And of course, under 2,000, I'll be buying even more. And here we are. We're at 2,100 pretty much. Let's see how the rest of this day goes. I might add a little bit more today. I might not. We shall see. Facebook is another one that is now down under 190, which I said before, guys, if this gets under 190, I'm going to be buying more. And I did prematurely buy a little Facebook yesterday. And now that I think about it, I also bought a little Google yesterday. But it's all good because, look, I'm averaging in with these companies. I like their valuations here, especially Facebook, guys. 14, 13 times earnings. It's pretty cheap in my personal opinion. So I'm buying. I'm buying all the way down on these two stocks for the long term, Facebook and Google, and Apple is more as a swing trade, right? Let me clarify that. So that's kind of where my head is at with those three big tech stocks. That's what I'm doing. I want to add way more, in Facebook and Google here, for the long term. That's what I'm doing. Call me crazy, but that's what I'm looking to do here. And when it comes to some earnings from this morning, we had John Deere report, which John Deere is completely cratering right now, guys. It's down 14%. And the funny thing is, they had a pretty good report. They double beat. $6.81 EPS versus $6.71 estimated revenue of $13.37 billion versus $13.2 billion. So they double beat, but they on top of that, they raised their guidance, but the stock is falling. I mean, this is the kind of market we're in. A stock is getting destroyed heading into earnings, which in this case, John Deere was down already 20%. It was already in a bear market heading into earnings, and then they report a double beat and they raise guidance and they fall another 15% on top of that. I mean, that's just the market that we're in right now. And John Deere took took the lows out. It's at a fresh low right now. We failed holding 320, which was a level I was watching this morning for John Deere. I failed holding, obviously. And at this point, I mean, it's probably going to start going down to that 180 SMA on the 3-year chart, which is right around 250, 260. That's where it could be going. I mean, it's not too far-fetched considering you could make an argument, which I believe this myself, you can make an argument that this is still overvalued considering the earnings, the price to earnings ratio is roughly an 18 last I checked. It's probably lower now considering they're getting destroyed. Now it's in the low 17s. Still very elevated in my opinion for a company that, I looked at their, numbers this morning very briefly. They've reported, if I remember correctly, $35 billion of revenue in 2012, right? Go look this up. I looked it up this morning. I think it's 36 billion. And in 2020, they did 35 billion in revenue. So for a company that essentially in the last decade hasn't really grown at all, to pay 18 times earnings for that, 17, I think it's pretty expensive. It needs to come down. For me to even consider John Deere, I might be crazy, but under a 10 price to earnings ratio, that's where I'd want it. And it's crazy to me because Facebook, I mentioned, has a 14, price to earnings ratio right now for the trailing 12 months. That's insane. Facebook is growing 20, 30% a year. Some years are a lot higher, but obviously it's not going to grow 40% every year forever. I mean, that just doesn't happen, and it's going to slow down eventually. But for 14, times earnings, Facebook's growing a lot, and it's cheaper than John Deere, which hasn't grown in the last 10 years. I mean, this is a crazy market that we're in. So for me, I'm just loading up on these tech stocks. I feel very confident in this. I mean, seriously, if you're looking long term, and I don't see how we could lose money on these stocks. Honestly, I could be crazy. I could be wrong. I'm not a financial advisor. I'm not telling you guys what to buy. I'm just being honest at this point, especially Facebook and Google. I don't want to say I'm guaranteeing we're going to make money because I'd be a fool to think that. You can't guarantee anything in the stock market. Anything could happen. Who the heck knows what's going to happen? But I'm so freaking confident in those two stocks, and that's why I'm buying them. And I'm sure you guys, are in those as well, or buying them, or some of you guys are, right? Hopefully not for me because I'm not a financial advisor. I'm not telling you what to buy, but if you've done your own research, you know what I mean, right? So we also had Foot Locker this morning to shift gears a little bit from John Deere and big tech. Let's go to Foot Locker now. Foot Locker, funny enough, is up 3.5% today so far. So let me actually add that to my watch list because I don't think Foot Locker is even in here. Now it's up 3.7%. So Foot Locker is crushing it right now, considering the markets are getting mollywopped. Foot Locker did $1.60 adjusted EPS versus $1.55, so they beat that, but they missed on revenue, $2.17 billion versus $2.2 billion estimated. And this is a stock that was already down 50% heading into this earnings report, so it was in a deep bear market. It was suffering. And look, it's been consolidating. Wow, I just realized this stock literally did not budge from 28 to 30 bucks. I mean, it was in that tight 2-point window since the last earnings report. So the past 3 months, this thing has been consolidating, and it seems like it's been waiting for this earnings report to start making a move. So I think I'm going to set my alert at 33 bucks right now, guys. I think if we start making a move towards the mid 30s, we might have a gap to fill all the way to $40. That's where I'm thinking right now. 40 bucks was support throughout December, into the new year, into almost March. So, yeah, I mean, when you break a support, it becomes resistance. That is where I think Foot Locker could be heading here in the short term, potentially. So set your alerts. Watch out, guys. These markets are freaking unbelievable. We are deep in the red. And, yeah. It's going to be, we're along for this roller coaster ride, right? And the number one rule is, if you're long-term, don't jump off the roller coaster, right? So with that being said, I'll wrap the video up. Cheers. Hit that like button, subscribe, join my Patreon, link down below if you guys want all my moves in the markets, kind of to keep up to date with kind of what I'm doing, where my head is at in real time. You get more access to me, morning videos, exclusive for the Patreon members. That is linked down below. Make sure to also get your 5 stocks from Moomoo. Also linked down below, and you also have a chance at a free share of Twitter if you deposit $2,000 on Moomoo. And if you deposit any amount of money on Webull, also linked down below, you get 5 stocks from them. So a bunch of free money linked down below. And with that being said, I'll catch you guys in the next video. Thanks for watching. As always, keep crushing the markets. Stay safe out there. Peace out.